So over the last 3 years that I've been covering Tesla stock on this channel, I've been pretty much hitting it on point. And in this video, I want to go ahead and provide an update on how, although we've had some bullish trading sentiment and momentum taking place with Tesla, I'm very concerned of where Tesla's currently at. And I want to go ahead and share a couple of reasons why. Now, I want to start off by highlighting this. So recently, there's been a lot of posts on X sharing how Biden is going to quadruple tariffs on Chinese EVs. Now, when I first saw this, I personally, just like everyone else, believed that this was pretty bullish news. This was great because this means that a lot of the competitors in China won't be able to bleed into the United States where Tesla has its largest market. However, it really is a big nothing burger, and that's simply because as I started parsing through several other financial websites, which you guys know I take a look a lot into several financial websites, I've stumbled across this article by Bloomberg highlighting how this hike in the tariffs is mostly symbolic and again a big nothing burger. And the reason why is simply because when you take a look, you actually start to realize that Chinese EVs were never really a big threat in the United States anyways. We barely have any Chinese EVs make its way into the United States. And so that recent news is mostly just all hype and not anything of much substance. But I want to go ahead and talk about Tesla stock from a fundamental perspective. Now, if you guys are new to the channel, one of the things I often highlight is how you want to have a multi-dimensional approach when you're taking a look at equities. And that means taking a look at the macroeconomic environment, monetary policy, fiscal policy, alternative data, technical analysis, fundamental analysis, and the list goes on. And so what I wanted to highlight is just Tesla from a fundamental perspective. Now, one of the things I recently did was update my discounted cash flow model, which is a financial model, on Tesla. And when I did that update to that financial model doing a DCF on Tesla, one of the things that I came up with was Tesla's fair value being around $128 per share. But I want to remind everyone that when you do these financial models, there's a lot of assumptions that go into play. And so your discounted cash flow model may be completely different from someone else's based on the assumptions that are imported in. For example, if we take a look at simply Wall Street, on their discounted cash flow model, they have a fair value of $78.97. Now, in my opinion, I don't agree with that discounted cash flow model. I think that's a little too steep, but I do agree that Tesla, from a fundamental perspective, is a bit overpriced. Now, my model is kind of more closer to where Tesla's at, so it's not a huge major concern with the delta from where the price is currently and where, my discounted cash flow model is. But of course, other models out there have it a bit further away, the spread from where Tesla currently is and where Tesla should be at. And so that, again, anything being overvalued is a big concern. And that's why I'm not really adding more shares to Tesla in my long-term portfolio. But again, you guys should only do whatever you see value in. But I also want to highlight a couple of other things as well. For example, a week ago, I highlighted this chart from Bloomberg showing how Tesla's valuation is an outlier compared to the mega cap names like Apple, Amazon, Microsoft, Alphabet, Nvidia, and Meta, where we see Tesla's forward 12-month PE ratio is traded at these high multiples. But of course, when you're looking at something that has a high PE ratio, that could mean one of two things. Either it's overvalued, or perhaps the perception is that market participants are willing to pay this high premium because they believe that, in the future, it's going to be a great bet. Now, I also wanted to just provide a clearer view just in case anyone didn't really get to see it. But here we have from Simply Wall Street, again, the forward PE ratio with Tesla compared to its peer. And the average is, 28 times, right, the earnings. But we're seeing Tesla at a large kind of extended premium here in comparison to its peers. But of course, the argument that a lot of the Uber Tesla bulls will share is this graphic right over here, which was recently shared in the Tesla Q1 earnings call, where we see the ecosystem of Tesla and highlighting how it's more than just a vehicle, right? But the thing is that although it's nice to believe that the humanoid robots are going to have a huge impact, which I do believe in the long term is going to have a huge impact, by the way, and how ride haul is going to have a significant impact on Tesla as well, the reality is, yeah, that's great, but that's not what we're seeing currently. And so what we're currently seeing, according to the recent statement of operations, Tesla's vehicle sales make up 94 or closer to 95% of its earnings. And so essentially what I'm trying to say is that paying Tesla's high premium price currently right now is taking a big bet that its future, products like, the humanoid robot or the robo taxis are going to significantly make a huge impact. And that's not necessarily a horrible thing to do. Of course, if you're very bullish and you're optimistic that this is going to do very well, then all power to you. However, although I do agree this is going to be great for Tesla in the future, I still want to wait for Tesla to come back closer to its fair value before I start getting a bit too optimistic. And I hope people don't get this wrong, because oftentimes when I talk about this, I've been talking about Tesla being overvalued since, December 28th, when we saw Tesla basically capitulate over 30%. And the whole time people were telling me, you're crazy. But the reality is, investors, although you want to be forward looking, you have to see what the business is currently doing. And right now we're in this tough macroeconomic cycle where, yeah, interest rates to finance a new vehicle is, at a high level, right? At the end of the day, right? For someone to buy a vehicle, most people end up financing. There's very little people who buy a vehicle all in cash. And so the reality is right now is just a tough time for Tesla. And that's why we're seeing, the earnings start to fall down. And that's why we're seeing investors, the people who are pouring capital into Tesla, be a bit skeptical into pouring more capital into Tesla, just like myself. I am not right now in this very optimistic mode for Tesla. And that's why I'm waiting. I'm waiting for prices to come down just a bit. And then I'll be more inclined to be very optimistic of the future. But right now, the business cycle is not very favorable for Tesla. And I know every time I say this, I get called out like, oh, this guy's a clown. He doesn't know what he's talking about, right? Although, we've been pretty much hitting it on point with Tesla for years now. The reality is, look, people want to pay high premiums if it justifies the amount that they're paying it for. And so when we're seeing the business cycle not favorable, you could always point that the future is going to be great, but the future is uncertain. And so you're taking a big gamble. And so that's why I'm willing to take that bet that Tesla is going to do well in the future after we see Tesla stock come down quite a bit. Now, taking a look at Tesla from a technical perspective, one of the things I've recently been highlighting in my videos is that Tesla is in this area where there's a lot of volume relative to price, meaning that there's a lot of exchange between the buyers and the sellers. And so essentially, we're not going to be seeing any crazy moves with Tesla at the moment. It's just going to be bouncing up and down and consolidating until we break out of this area of high volume relative to price. And so right now, all the Uber Tesla bulls, every single day Tesla has a massive green day. They're like, oh my God, Tesla's going insane. It's going to the moon. And then a couple of days later, it just reverts back to where it was. So right now, I'm not too interested in Tesla. I'll be more interested in Tesla once it breaks above from this area or possibly below, closer to the fair value in my discounted cash flow analysis. But again, at the end of the day, you should only trade or invest in whatever you see value in. But one of the things I've been doing is not really buying Tesla or even trading Tesla in my short-term trading account and trading several other names. I mean, we've killed it this year with gold. We've killed it this year with Nvidia and a lot of other names. And recently, one of the members within the Push and Profit private group actually highlighted a ticker that I wasn't even looking at. And we actually set an alert to trade it if it broke out of a certain level. And it recently broke out of this level and went insane. And that ticker is SG, where we see that I set an alert right around over here. And we saw SG pretty much break out doing insane numbers. And so right now, while everybody who is a Uber Tesla bull has just pouring more capital into Tesla, taking that high premium risk, believing and betting on the future, we've been making a lot of profits within the Push and Profit private group, trading a lot of things that are happening right now. Again, I am bullish on Tesla in the long term, but paying these high multiples is kind of risky when we don't have certainty of the future. And so that's really the point that I'm trying to say. Now, in other news, we also had something recently that's a bit concerning for Tesla, but it's not a huge concern. And again, it's not going to be something huge and meaningful, but we're seeing plans kind of stifle with the plant in Germany. And that's simply because we're having protesters, kind of stop and stifle the plant simply because the plant is trying to expand in Germany, but we have a lot of individuals over there protesting that because we're cutting trees they're cutting trees to expand in Germany, it's a huge problem for the environmentalists. And so this has been going on for a couple of days now. We've had several people injured and arrested, and this of course is just stifling plans, although it's not going to be a huge thing like what we saw during the pandemic with the plants in China, where we literally had them stop operations. But it is something that we want to be mindful of. Again, you want to be taking a look at equities from a multi-dimensional approach, and you also want to factor in catalysts and what's taking place. And so hopefully this is something that fizzles out pretty quickly. I don't think it's going to be something that extends for a long period of time. As we know, or we've heard, the German government be very pro-Tesla, saying that Tesla's adding a lot of jobs to their country. So of course, if they want to go ahead and expand and cut a couple of trees and make more EVs over there, well, that's not a huge problem. But of course, you have the environmentalists protesting, and that's kind of slowing things down. But again, I don't think it's going to be a huge concern. But with that said, hopefully you guys found value in today's video. Make sure to hit that like button if you haven't done so already. Subscribe to the channel as well. And before you guys go, make sure to check out this video right over here, and I'll see you guys on that next video. Take care, guys.